Hey guys, and greetings from Atlantic Wealth Management. My name is Greg, and I'm joined with my teammates Tara and JA, and we're excited you're joining us today. We thought it would be helpful to give you a quick video with 5 year-end tips that would be helpful. So let's get started.
And as always, this information is for educational purposes. So before you make any major financial decisions, be sure to consult your tax preparer, attorney, or financial advisor as appropriate.
All right, first we're going to start with required minimum distributions, or RMDs. If you're taking RMDs, those have to be withdrawn by December 31st of this year. Keep in mind that the accounts are not aggregated. So for example, if you have a 401k and an IRA, you need to take a RMD from both of those accounts. However, if you have multiple IRAs, the RMDs are calculated separate, but you can take the amount from one IRA. Whatever you do not withdraw from the accounts that require an RMD, the IRS can subject a 50% penalty.
Ouch.
Yeah.
You don't want that.
No.
Tip number 2, charitable giving. Making a charitable donation is a purpose-driven way to make a difference in your community here and nationally. There's 3 major ways to do this. One way is just writing a cash gift. So you would just write a check and make that donation. A second way is you could open a donor advised fund, and you could make a larger contribution into that donor advised fund, get the full charitable gift in this year, and then use it like a charitable checking account over many years. And then third is if you're in the distribution phase of your IRA, taking those RMDs, you could give what's called a qualified charitable distribution, or a QCD, and you could give that directly to the charity of your choosing, keeping that income off of your tax return and making a gift at the same time. So a very important way to do that.
Okay, so for tip number 3, we'd like you to consider employer-sponsored retirement plans. There is a limit for contributions for 2021, which is $19,500 if you're under age 50. If you're over age 50, you do get to contribute an additional $6,500. These contributions have to be in the account by the end of the year. The reason we bring this up is because sometimes payroll departments take some time in order to process any changes as far as payroll deductions. So if you'd like to make changes, we'd encourage you to do that now.
Tip number 4 is to consider tax loss harvesting between now and the end of the year. So if you have a non-retirement account, and maybe you have an investment in that account that has underperformed, you may want to consider selling a portion or all of that investment to realize a loss. And you may do that in order to offset gains that you've realized earlier in the year. You can also on your tax return actually recognize up to $3,000 in realized losses. So that's a consideration.
And lastly, tip number 5, flexible spending accounts, or FSAs. Flexible spending accounts allow employed individuals to save pre-tax dollars for qualifying medical expenses or dependent care. You'll want to check to ensure you don't have any funds that are expiring at or before year end. And in recent years, FSA accounts have become more flexible and carry over provisions. So we would just want you to double check your provisions in those plans.
Absolutely. All right. Thank you for joining us today. We hope these tips are helpful.
Some of these strategies can be complex. So if there's any way we can help you with any of them before the end of the year, just let us know.
And from all of the team here at Atlantic Wealth Management, we wish you and yours a very safe, happy, and prosperous end to your year.